Hey everyone, welcome back. Let's just go over a couple of steps here as to how do we put it all together and what can we do with the information that I gave you guys. This is the Asian Session Range by Rob Minty, same one I showed at the beginning of the course. There is a bunch of other free Asian Session indicators. I believe they all do the same thing. As long as you have the appropriate times, you should have no issues with any of them. If you don't like the way this one looks, I'm sure you'll find one that does what you need it to do. They all do the exact same thing. Anyway, so when I come to the chart, I know first thing I want to look at is what we chatted about in the last video. Where are the major liquidities? So previous days highs and lows and previous weeks highs and lows are pretty major. Whereas like Asia session highs and lows, I consider that a medium inducement. But what I do know that if one side of Asia gets run, a lot of times the other side of Asia gets run, even if it's not the same day. A lot of times it does happen the same day or within a couple days. So you guys can see here, Asia highs get run, we come back down, Asia lows get run. This Asia here, both the highs and lows went in the same day. So the absolute best setup for Asia is obviously the sweep and go the other way. It doesn't always happen. Sometimes Asia just rockets without a sweep, but a lot of times Frankfurt will sweep. For those of you that can trade, Frankfurt Open, you can do pretty well. This is probably the easiest time of the day to trade a currency pair. So overall, right now, this is USD CAD. It's bullish, and we're looking for a retracement right now. I know one of two things. If we react to either one of these points, that there's a very high probability that we're gonna see a reaction. So how can we use that in our trading? So within Asia itself, your highest probability setups come once the Asia high or low has been broken. So if price is just doing this in here, can you trade it? Yes. Is it as high probability as when price breaks out of the box? No. Once price breaks out of this box, whether it's to go up or down, or it's just a sweep, you want to break the highs and lows. That is a draw on liquidity, so it gives us confluence that hey, we swept Asia and maybe we could go the other way, or we broke through Asia, and the likely thing to do is to target this and maybe look for a sell. So when your sessions and major liquidities align this close together, it can make for a really high probability setup. It's not going to happen every day, but it is nice when it does. Obviously, it's just not realistic for this to happen every day, but this will happen a couple times a week. So I would pull these points, and I would even go as far as pulling this guy, and we can pull this low as well. Now, most of the time, London or New York will put in the high. The odd time Asia will, but most of the time London and New York make the highs. So, just go down to like maybe 10. You can go down to like 1 and just kind of watch. So we're right at Frankfurt Open here. We're getting close to it. So, for me, so Frankfurt opens, just kind of watching. So you haven't broken out of that Asia range yet. All right, so London looks like it grabbed a little bit of liquidity and it's kind of heading the other way. So in the way that we talked, Asia highs and Asia lows are medium liquidity. The Asia midline is considered a minor liquidity, meaning if London tapped into it and had a reaction, anywhere around the midline can be a good confluence to go out the other way. However, it is a lower probability setup as you have not broken out of Asia. All right. And Asia high gets broken. So if you were to look at a 1 minute POI of what broke Asia, it would be this. To me, so as soon as we broke that Asia high, to me, the POI would be anything right to the bottom of this wick where all that imbalance is. Price does not have to come to our POI. So with that in mind, we know that everything from this POI to this imbalance is our POI. If you want to be a little more conservative, you could pull it tight to where the break happened. That's totally fine. Now, in situations like this, you could put an order on the whole thing if you wanted to, or you could just market execute this and cover just the candle. A lot of times it will take off. If it doesn't though, and it wants to come deeper into the POI, this is a good way to definitely hit stop. It does work a lot of the times. You have to test it for you to see if it's worthwhile. So not a very big trade, but for me, that's as high as I'd target. And because that is major liquidity, the previous day's high, I'm more inclined in looking for the sell than I am for the buy. From a pricing perspective, I'd say we're pretty poorly priced and very premium. This would be kind of I wouldn't say grade A setup. It didn't come from a higher time frame POI. If you wanted a higher time frame POI, you could pull this POI itself. So the POI is this. If we talk, as we talked before, the whole wick is imbalanced. So just to show you guys, I'm gonna move this off to the side. So we'll just say we took that on the 1 minute. This whole wick is imbalance. To me, though, the part of the imbalance that matters the most is where the break happens. So you could say everything from this black line here is a higher time frame POI, such as 10 minute in this case. If you didn't want to enter on the 1 minute and you weren't too sure about this entry that we took, you could always just wait for price to come back. And for me, so that's a pretty aggressive reaction. So for myself, if I went to market execute that, I know I would have got a bad fill. What you gotta at this point understand is this trade's probably not worth taking with this big of a stop. So I would probably just sit this one out. It's poorly priced. For those of you that are really conservative and you're really worried about your R's, you can put an order in on half of just half of the original POI and not cover any of the imbalance. Now, in this case, price does come tap you. What a lot of times price would do is just barely tap this and go. So understand that if you're going for more R's with a tighter stop, there is a high probability you may not get tapped. This one would obviously tap you if you went on the half. And if you took the whole thing, it just wouldn't be worthwhile in this case. If you wanted, you could just maybe split it. I don't know, 3R. That's kind of borderline not worth taking for me. I really, I try to get as close as I can to at least a 4R to justify a trade that keeps you profitable. So I likely wouldn't take that. So for me, the reactions really matter. So a lot of times, rather than just taking the trade, I'll look at the reaction from where I want to execute and I'll mark it execute. So again, this one wasn't really worth taking. Depending on your risk management plan, you might have even broken even on this. Now, you are tapping into that major. So what we forgot to do was pull a. So to me, the POI would have been this supply and the whole wick. So we actually that one already got tapped. We won't bother pulling that. This one's not as important because it's below the major. The next most important POI would be the guy with the wick. So what I want you guys to understand, even though this is the POI, I wouldn't be looking to take a trade off of it until it comes above your inducement. So in this case, you could say this is your first drive, second drive. So we got our drive, we got another drive, and we just took our third drive. At this point here, with it being the third drive and where it is, I don't need a chalk to execute this. If I get the right candlestick language, I do not have a problem with executing this. We're getting wicks to the upside. As soon as you get a bearish engulfing or more wicks. Now, with how extreme you are in this POI and this bearish engulfing, I would execute that on the spot and give yourself a little room to breathe. So, now that we've swept Asia highs, I would be looking to run Asia lows. London lows would be a good place to pay yourself, take some partials, and ultimately you could go for the Asia lows. Now, one thing to keep in mind is if this is where our POI above Asia was, where we had our minor pulled, we should assess what's below Asia. We can just check the 15 here. And below Asia, we have this POI here. And I would pull the imbalance right underneath Asia. Now, when you see something like this, for me, I don't need a lot of confluence to go the other way. If I ran Asia highs and it's showing me that it wants to reverse, I'm going to go the other way. If we run Asia lows and it's showing me it wants to go the other way, I'm going to try it. It's not always going to work. So it works here. Here you might have got partials and broken even. But that for me is a confluence of its own. So whether you're looking to fill the imbalance completely, you can, but price does not have to fill it completely. Price will more than likely run Asia. What I've had happen is that wick Asia by like 0.1, 0.2 and just go the other way. So definitely be careful with how you target these. And we can kind of just see. So just go to the 5, maybe fast forward a bit. So if you wanted to stack any kind of cells from a London perspective, anything above here, if there was cells, you totally can, and the target would still be the same for me. So did break through a POI here. Now this is a bit of a weird one. I should turn that off for a sec. But the way I view this is your POI, and for me, everything above here, I kind of look at the reaction. Now, with that being the imbalance, I prefer that it comes at least halfway. So for me, that's literally maybe almost halfway. I likely wouldn't have got into that. Or if it came a little higher, I would have definitely maybe looked for something. So for me, it would have definitely had to come a little higher. I don't think I would have been interested in that myself. All right, so let's go to the 5. Turn sessions back on. And you don't need to keep them on. You just need to know where your session lows and highs are. All right, so we're still in London. All right. So right now, 3:30 to 5 my time. It is dead zone. Your trades are lower probability in this time. The volume's low. Doesn't mean you can't trade. Just understand that probability is a little bit lower. All right, so we have a POI here. So POI would actually be here. And I would pull the imbalance right up to where the break happened. All right, I'm just going to clean this up a bit. Cool. So you're still kind of in that dead zone. All right, so New York opens. New York's known for fake outs and reversals. So your safest trade would always be waiting for at least the 5 o'clock. As far as would I take this immediately? Maybe, maybe not. The really good place to look for a trade is at the bottom of the London break. And if we wanted to continue down and price had the momentum, I would basically look at how Asia reacted as well. If it came through there with a huge bearish engulfing, you could continue it. If it reacts and gives you wicks, you could buy it. So with that in mind, so say that's your POI. This would be your imbalance. So we'll just kind of hang out. No rush here. Nope, we don't need to be in the first trade. All right, so you break London here. And to me, would say something in this wick did it. So wicks are again imbalance and POIs we like. You could even pull the bottom of the wick too if you want, but this is where my sell to buy happened. This is where the break of the session happened. So sell to buy wicks don't have as high of a hit rate as an actual POI, but if they do something like take a session high or low, then they're worth using to me. Or if they have major or medium liquidity above or below, then they're usually worth trying. Now you're in discount now, meaning you're lowering the leg. So that one may have hit TP without us. So, see the way this bottom formed? It's a very flat bottom. Those usually get run. You see something like that form, that is in the first course we talked about double tops and triple tops. That is a liquidity to target. Whereas if it comes to the bottom and you get something like this, I would 100% be looking for buys. So you did tap into our POI. I would probably wouldn't be a very long trade, but I would at least run these. So my broker's pretty good. That would have kept me in. Depending on your broker, that may or may have not kept you in. So quick little 4R. So you could say this was our first drive into the imbalance. This would be kind of our second. You're getting a decent reaction there. All right, so you're getting a bit of a pullback. All right, so if this was our first drive into the imbalance, second, you got a pullback, third. For me, I would probably market execute this. If you want to be safer, wait for a chalk. So your POI would be this guy and everything up to where the break happened. And like I said, I would have had zero issues with market executing that, being that it is on the third drive. And really knowing, let's see, 8 o'clock, we still got time. Got a pretty decent reaction. Depending how late you're getting in the session, like I'd hold this, but if you're getting into, 9 o'clock, past 9 o'clock territory, take partials or break even. So as far as your POI though, it would be everything from this imbalance to this POI. If that's too big for you, you can either shave it down or, kind of avoid it altogether. Totally up to you. I'd probably execute this wick. So this kind of depends on your risk tolerance. As soon as I got that doji, I'd probably execute that. And again, if you're wanting to be a little safer, you'd probably cover that or cover a bit below it. That's totally up to you and up to your testing. But I know these POIs that react good and leave imbalance and have aggression like this, they react. If I get a really good reaction, I know there's a really good chance of this trade going. So back to our entry video, you get your chalk, and it doesn't just barely break it, like it smashes through it. It smashes through it so much that it leaves this imbalance. So whether you market executed this guy or you took this, this would be absolutely the safest entry. This guy here would probably be your less safe entry, but so you're definitely kind of losing volume. I would break even anyway. Like I don't mind holding these if there's no risk. Yeah, for myself, probably around here, I would have just closed something. If you're just wanting to secure profits too, you see something like this and volume starts dying, just move your stops to here if you want, and at least secure something, or just break even and hold it. But either one of these would have been a valid entry. So for myself, if I market execute something like this, I leave my stops open a bit longer because I know that this is likely coming back to retest because, well, based on supply and demand, this is our most common entry, and we know that chalks will likely get tested. So I hope that kind of makes some sense as to how we use sessions and reactions as confluence and targeting. This definitely takes some practice. It's not everyone's going to implement the sessions into it, but I can tell you right now, on the days where your sessions and your liquidity and your reactions all line up, you're going to have a very high probability setup. Not one currency pair is going to give you a grade A clean setup with all the stars aligning every single day of the week. It's just not going to happen. But if you get, 2-3 clean setups on Euro USD and during New York, and 2-3 clean setups during London, for those of you that can trade both sessions, you can definitely capitalize. For those of you that can't, you could either look at a second pair or just sit the session out, or you just understand that if you're taking setups and all the stars don't align, they're a little lower probability. It doesn't mean it can't go. It's totally up to you within your trading plan, but that's kind of how I use sessions. Basically, if we have, sessions and liquidity all lining up like this and you get a reaction, I would turn around, target this. Once again, I wouldn't recommend holding full volume. Find somewhere to take partials. It doesn't always go where we want it to go, so it's better to have something off the table. So this is definitely going to take a little bit of practice for some of you guys. Some of you guys may completely skip this concept. What I can tell you, the secret with sessions is finding where the flip zones are that took the sessions out, and basically that's where you're looking to get in. On the way back, you're basically looking to see where the flip zone is that gave you this high. So in the session, when it comes back to it, you're looking for the flip zone that caused this break. I believe we looked at this. I don't think there was an entry there for us. This one here came into our 10 POI. It was a bit subjective. If it had come deeper in the imbalance and gave us a few more taps, maybe I would have taken it. But during the timing itself, I don't like this. And again, that's up to you and your risk tolerance. But yeah, I hope this makes some sense to you guys. Try to implement it. Try to, take 200-300 trades back testing over a couple pairs, and you will see how much confluence that major liquidity, medium liquidity, and session highs and lows can add to your trading. And the other thing to take away is obviously the imbalance and our POI sizes. So here, for all our 2-pip warriors that would have taken this, if you waited for this chalk, you actually didn't get tapped. For those of you that weren't greedy, you still caught a 6R. Even if you took a bigger stop and caught a 4, that's totally fine. But just goes to show you that sometimes imbalance is auto react to. It doesn't have to come all the way down there. So with that in mind, I hope some of you will definitely open up to the possibility of either taking bigger stops or watching the reactions. I will see you guys in the next example video.